Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be continuing our work using the indicator exponential moving average, and to pinpoint the entry point we will also be taking the help of MACD. So using these two indicators we will look for the entries with the trade. For the buy trade we will look for the momentum to be on the bullish side, and for sell trade we will want the momentum to be bearish. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, I had explained to you how we can get the instrument subscription done, where the Euro USD was the instrument of choice. Afterward, the position amount was defined at zero to make sure there is no existing pending or open position on the account prior to the execution of the new trade. These three exponential moving average indicator blocks have been added, with the candle period being hourly and the look back period of 1. Both these cases, I think it is 1, which will need to be changed. It should be 1 and 2. No, I think 1 will also be fine, as we have to just look for the crossover and the time period is different, so my mistake. And here we will also be considering the formation 25 hours back. So for that we are looking for these EMA indicator defined for the hourly candle period with the time period of 50 and 100, with the look back period of 25 in both the cases. To then pinpoint the entry, we will be taking the help of MACD crossover. So for that, these three MACD indicator blocks with the hourly candle period have been added with the look back period of 1, 2 and 5 respectively. And to look at the price volatility, we are taking the help of these info candles or get historical candle. Okay, now I will give you a brief refresher of what the logic is going to be for the execution of the buy trade. This session is going to be dedicated to the buy side of the equation. We will try to get the buy side algorithmic formation done, completed in today's session. I will need to change the chart to Euro USD. Now, here the logic is simple. We are considering the crossover formation of the EMA 50 and EMA 100. For any buy trade to take place, we need the EMA 50 to be trading above the EMA 100. So we will need the output value of the EMA 50 to be greater than the output value of the EMA 100 for the last hour. But 25 hours back, the case should have been reversed. So we are just trying to make sure that the crossover has happened recently within last 1 day, and for that we are taking this look back period of 25. So 25 hours back the formation should have been on the opposite spectrum. If the momentum is bullish, now priorly it should have been bearish, so that's what the requirement is going to be. So whenever this crossover happens here, it takes place at around 4 or 5 GMT. Then only during the first 24 hours till 5 GMT of 21st June, the execution will take place whenever the crossover happens on the MACD line. But after that, no execution will take place, even if we get the MACD crossover. So that's the logic is. And 25 hours back, the EMA 50 should have been below EMA 100. Then we look for the condition revolving around the MACD. Provided the EMA conditions are in place, we want to initiate the trade as soon as the MACD line crosses above the MACD signal, and it should be in the positive territory. The MACD and the MACD signal output, both these output values will need to be in positive territory. That means above zero. And then in the last 1 hour, the MACD should have crossed above the MACD signal line, and in the prior hour it should have been on the opposite side. The MACD line should have been below the MACD signal, and also 5 hours back that should have been the case. So that will indicate that the correction has happened and consolidation has also taken place. So in the last 4 or 5 hours, there has not been much of a momentum on the corrective side, and rather the prices are consolidating. We will also add the condition that the 5 hours back also the MACD and MACD signal output should have been in the positive territory only. So that will be the requirement. And for last 1 hour, the closing value will need to be greater than the opening price, and in the prior hour, the closing value should have been below the opening price. So that will also confirm the price formation is turning from bearish to bullish. So that's how this logic is going to play out. Now we have to turn our focus to the execution side. So for that, I am going to first define the conditions involving the EMA output values, and here we need to define the crossover. So for that, I am going to take two of these blocks, the EMA 11 and EMA 16. EMA 11 needs to be above EMA 16. First input greater than second input. 25 hours back, the case should have been different. The EMA 17, which is the 50 hours EMA, it should have been below the EMA 100. So first input less than second input. Then we consider the MACD formation. The MACD output values need to be in the positive territory. So both these MACD 12, MACD signal, both these values need to be on the positive side. So first input greater than second input being 0. Again, it will be 0. Five hours back also, it should have remained in the positive territory only. So we consider the MACD 20 and MACD signal 20. Both these values will need to be greater than 0. Okay. Now we consider the crossover formation. In the last 1 hour, the MACD line should have crossed above the MACD signal line. Here you can see that whenever the momentum is bullish, the MACD line tends to be above MACD signal line. So we will consider the crossover as the opportunity to initiate the new trade. Okay. MACD 12 needs to be greater than MACD signal 12. First input greater than second input. Here the MACD signal 20 should have been greater than 0. And in the prior hour, in the penultimate hour, second last hour, the MACD line should have been below MACD signal. So in the last hour, the crossover is happening. After that, we take in the new if else block, first input less than second input. Now we have to consider the price formation. The last hour's closing value will need to be greater than the prior hour's the opening price. And in the prior hour, in the second last hour, the closing value needs to be less than the opening price. And after that, we define the entry point as soon as the price starts to rise above the last hour's closing level. So for that, I'm going to use candle 20 seconds closing and opening prices. First, candle 20 second is the last 1 hourly candle. Candle 20 second candle close greater than candle 20 second candle open. First input greater than second input, whereas candle 23rd closing level should have been below the opening price. Candle 23rd is the second last hourly candle, and there the momentum should have been on the bearish side. First input less than second input, and then as soon as the price starts to rise above the last hour's closing level, we will look to initiate the new buy trade. So we have to compare these 10-second candles, candle 24 and candle 25 closing levels with the candle 20 seconds closing level. So I'm going to take candle 20-second candle close. And consider candle 24 candle close. First input greater than second input, whereas the penultimate 10-second candle, candle 25th, it should have closed on the lower side. Okay. So after that, we take in the multiple action block, which is a logical component. Let me arrange these blocks on the lower side, which will not take much time. Okay, so these blocks are in place now. Now we come to the execution point. The execution point will be the opening price of the last hourly candle. So we are going to place the order on the lower side. Okay, so for that we will have to take a trading component, pending open, and then we need to define its parameters. First thing first is going to be defining the entry point. Here, first input less than second input. After that, we have to define these input parameters. For that, I'm going to take mathematical component, calculation expression. So whatever is the last hour's closing level, we will have to deduct from it the difference between the closing and the opening price. So for that, first we will have to calculate last hour's opening and closing price difference. So I am going to take candle 22nd, second candle close, and from it deduct the candle 22nd candle open price. So this will be A1 minus A2 by side closing difference. Okay, and whatever is the difference, we deduct it from the closing level, or we can straight away put in the last hour's opening price and there is difference which we have calculated. We will use it for defining the stop loss and take profit. Whatever is the actual difference, we will take twice of it as the stop loss, and we will then multiply it again by twice to get at the target price level. So this difference will be multiplied with two variables, one having the start value of 2. Okay, and then another variable for pip conversion, it will have 10 raised to the power 4 as its start value, 10,000. Okay, so this will be A1 into A2 into A3. This will be our stop loss. And twice of it will be our take profit. So I will create new variables here with the different data type. We need to make sure that the data type is of integer for these trade command block variables. So this will be stop loss. Okay, and its result will be derived from this calculation, and whatever is the stop loss, we will take twice of it as the take profit. So this will be A1 into A2, and this will be named as the target price. And the execution price is going to be the last hour's opening price. This will be a limit order by limit. So I am going to take candle 22nd candle close. Candle open price as the opening price point for the execution of the trade. Now we have to define the trade amount, which I will change to 0.1 million. Slippage 2 pips is good enough. Default instrument remains as it is. And coming to the order validity, I think order validity of 1 hour or say for that matter 2 hours should be good enough. So we have to create a new variable for the order validity. So again, one more time, we have to bring in the calculation expression. So whatever is the last tick time, we add it to 3.6 million ticks multiplied by 2 to make sure that the order validity is 2 hours. Okay, this will be named OVT. Another variable. We already have a variable with the start value of 2. We will use it as it is. So I am going to take this variables and the calculation will be A1 plus A2 into A3. Okay, and this will be our order validity. So the order will remain valid for 2 hours. All right. So with this, our formation is complete. The buy trade requirements have been put in place for the execution. Unless these conditions get satisfied, no execution will happen. So that's it for today's session from my side. For any query or any idea to share, you can write to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.